Hey, what's up, Dividend Nomads? Welcome back to the channel. Today, I'm going to dive into my Schwab portfolio and share you guys what's going on over there during these tough times. But really, my portfolio is not too bad. A little bad, but not too bad. So I'm going to dive in here and share with you guys, share with you what I have, what I'm planning on doing, and yeah, let's just do that real quick. Let me record the screen. Let me see. 3, 2, 1. Bam. All right. If you did I put my dividends in? Anyway, I don't know. If let's look here at the top. Let's go back here to this page. I'll refresh it for you guys. This is 8 o'clock in the morning here in China. Right now, you can see the Dow was beat up yesterday. NASDAQ pretty much flat, and S&P is pretty much flat. It started out looking bad though. Right now, $74,826. So my account is down. My cash, $11,937. View all the positions, which I only have 3 right now. XDTE, 883. WPay, 436. And YBTC, 107. So not too much going on in my portfolio. But I do want to share the performance with you guys and share the dividends and stuff like that with you guys and tell you guys about what I'm thinking about this portfolio right now and what I'm thinking about doing and just in these tough times we're in, and also a little bit about the future. Let me open up this thing on my computer real quick, if I can. Okay, let's do it. New screen recording. 3, 2, 1. Bam. All right. So if you go to the positions here, there they are: WPay, XCTE, YBTC. Everything else I sold. If we go look at the overall performance, it's not been doing very good lately. Let me make it bigger so you can see it and try to get it all on the screen. Okay, so WPay, you can see the market return is down pretty bad. Total return is down pretty bad. 4.6% negative on total return. XDTE, this is a new position, so it's going to take some time to do its thing. But right now, if you guys have been hiding under a rock, all tech has been getting hit pretty hard. Nvidia, Palantir, Robinhood, basically anything in the NASDAQ is just getting slammed hard. Which, I mean, to be honest, it's overdue because it's been just crazy valuations, and it needs to come down. So it's partly my mistake for buying into this at that time. So it's not any flaw or fault with the particular ETF. It's just the timing of it. But I'm okay with that because I do believe long term in the market. So I'm okay with this. What else? XDTE. You can see the market return is down a little bit there too, but the total return is positive. I've had this for a long time, and it's had lots of time to do its thing, but total return is 7.36%, which ain't bad. This is just kind of my steady eddy. It does what the market does, right? The market goes down, it goes down. The market goes up, this goes up. It just doesn't go up a whole lot, but it does go up. So I'm okay with that. And YBTC has been getting destroyed lately because obviously Bitcoin has been getting destroyed. And I still have a positive total return on this one. But yeah, I may have to cut this if it gets too bad. Probably if it gets 10% or less, I might go ahead and cut this and take a look at it later maybe. I would rather be in the market in the actual S&P, which is XDTE, than Bitcoin. So that's what I'm thinking of doing there. What else? Let's go look at the dividends. Here's the dividend log. So WPay 474 this month. This is XDTE 371 this month, and YBTC 64 this month. And again, we're gonna get, let's see, 1, 2, 3, 4, 5, 6 more payments. So still got 6 payments coming from what I have if I don't sell anything. Over here, we've received $973 so far for the month. Like I said, 6 more payments, so probably maybe near this $2,000 mark, something like that. So that's the Schwab account. So as I mentioned in my previous video, if you didn't watch it, you should probably watch it, but I talked about volatility and how I like to invest like when you have volatile times, right? And I try to protect my account with more stable stuff like XDTE, a basket of the S&P 500, but it pays me some income. Will XDTE go down? If the market goes down, yes, of course it will. But it's the S&P 500, so it will go down the same as the S&P 500, but pay me some income. Now, when the S&P 500 goes up, if it's not a choppy market, if we're in like a market that's going up, XDTE will go up because I've seen it go up. I've seen it climb out of a hole after the terrible tariffs and go up. So it can go up. It just needs a long time frame when the market is going up. But if you're in a really choppy market and you have very volatile swings, when the market drops like 5% in one day and then goes up 5% the next day, it's going to be hard for any covered call fund to recover from that. So it's not NAV erosion. People will say it's NAV erosion. It's not NAV erosion. It's just when the market goes down, your stocks go down. When the market goes up, if you're in a covered call ETF, you're capped and you can't capture all that upside. So you go up, but you don't go up as much. So it makes it much more difficult to recover when you have these volatile swings in the market. So it is normal to experience that with the covered call ETF, which is basically what, most of the people who are watching this channel are holding, right? So you just have to understand that this comes with it. And the best way to protect yourself is by being mostly invested in the index and not the single stocks, because they're just so volatile and they can move drastically as opposed to like the S&P 500, right? Like usually the S&P on a bad day, it might go down 1% or 1.5%. It usually don't fall like huge, but it also doesn't go up hugely either. Like it's not going to go up 5 or 10% in one day, which means you can go up with it and capture that upside as opposed to a single stock ETF. Say you're in Nvidia or something like that, right? And it drops 10% in one day. You drop 10% in one day. And then Nvidia goes up 10% the next day. You might go up 5% or something like that, depending on the calls that they purchased, right? So you're going to be capped the upside. You're not going to capture all the upside, which means you'll always be struggling to catch up. But when you're in the index, you stay closer to what the market's doing. So you might go down, but you can go up at a decent rate compared to some of the single stock ETFs. So that's how I like to look at stability. Is most of my money or most of my holdings are going to be in the index just for that stability, because I don't want to see my account have violent swings of 10 or 15% to the downside and then have to wait years to recover, right? Like it's not what I'm interested in. And when I'm trying to live out of your portfolio, trying to live out of my portfolio, I don't want to tolerate or can't tolerate something like that because I need the money to live off of. So if that's you and you're thinking about trying to build a portfolio you can live out of, I would definitely focus more on high quality index based play, not in like a OT or a YMAG or something like Magnificent Seven, because that's basically tech heavy, and there's sector shifts, right? Sometimes tech does really good, sometimes it doesn't, sometimes other things do good. And during that downturn, if you're in a Mag 7 or some kind of type of tech ETF, you're going to struggle. But if you're in the overall market, you'll have more stability. And that's, for me, what I prefer when I'm trying to live out of my portfolio. If you're not living out of your portfolio, who cares? It don't matter, I guess. But for me, I want stability. So anyway, that's all I got for you guys. I'll see you guys on the next video. Y'all take care.